Good evening, everyone. So today's concept or today's our agenda is to discuss about day trading of options or even day trading of stocks. Right? There are many members, many new traders. They come and ask like, why can't we do swing trading? Why can't we, why can't you give some swing trades or in this market? So that's where I thought like to explain everyone about different types of trading and also explain like what are the advantages of day trading compared to swings or positional trading in this market. So as you all know, right, trading, you can do trading with futures, you can do trading with crypto, you can do with options, you can do with stocks, whatever the security is, right, whether you're doing with equities or option contracts or future contracts, whatever it is, there are mainly four types of trading strategies we can use. The first one is called as scalping. What do you mean by scalping? Where you quickly, right? Your holding period, for how much time you are holding that security in your account, maybe few minutes, or maximum is few hours, maybe 1 hour, 2 hours maximum. That is basically scalping, right? Sometimes even it can be few seconds also, 40 seconds, 50 seconds. Especially every day there will be some breakout stocks. Whenever market opens, for example, there is some good news on that day about Tesla, right? Delivered so many cars in this factory in the China compared to this many. Then suddenly, if you take a trade at the market open, immediately within 1 minute, you see that it going up by 30-40%. Or you saw some news about Pfizer, they got some approval in Europe. Immediately at the market open, you buy, within few seconds you see you make 20, 30, 40% profits. So if there is a good catalyst for a stock in the after hours of previous day or in the pre-market, generally the scalping strategy is very good. So those stocks will break out and you can make good profits within a minute or within 2 minutes, but you should be very quick to enter and exit. So that strategy is called as scalping, where the trading time frame is very, very short term. You can do high number of trades. You may do 10 trades, 20 trades per day using this scalping strategy, where your typical holding is minutes or maximum 1 or 2 hours. Generally, we use a tick chart. We use 1 minute, 5 minute, and 15-minute time frame charts, right? You all know how to look at the charts and how to, right? I'll also explain. But basically, you're looking at 1 minute candles or 5 minutes or maximum. Generally, you don't use 15 minutes. Most of the time, we can also use a 3 minute, 1 minute, 3 minute, 5 minutes for scalping. But your monitoring should be very active. You cannot take a trade and you cannot get into a meeting or something, right? Because your holding period is only a few minutes. You cannot enter a trade. So, for example, KC, right? We have a different analysts, KC, MG. So KC's trading style is more of scalping. He generally takes the breakout stocks at 8:30. Before 8:30 itself, he says that, oh, I'm looking at Tesla puts, I'm looking at Nvidia puts, or I'm looking at SPX puts or something. He says before 8:30. So you should be ready with the right with all. Keep everything ready to click on a button. Whenever he says that I am buying, immediately you click on the buy button. So that is called as scalping, where your monitoring should be very active. You cannot just take a trade and you cannot go somewhere. And the fee is high, right? Because right, for example, you're paying option contracts. Every option contract you pay some 60 cents, 65 cents based on the trading platform you are using. So your fee will be high. You are paying, right? You may do 20 transactions, 30 transactions per day. So you are paying for all those contracts. And the liquidity is also high because you are buying and you are immediately selling. So you got back your cash. Again, you are buying something, again, you are making some 10% profit, 15% profit, again selling it. So you have liquidity. Your money is not stuck somewhere. That is the advantage with scalping. So again, right, you can use it for futures, you can use for options, you can use for stocks. Mainly with futures, you can do a quick 5 point to 10 point where you can make some $250 to $500 on ES. or you can do on NQ, you can do on crude oil. With stocks, generally, right, I'll share a strategy, what type of stocks we can do scalping, what type of stocks we can do day trading. I'll share some strategies, but understand that this is a very good strategy. If you can enter and exit on time, we can make a lot of money, right? Even if you make 10% within few minutes, and if you do 10% on 10 stocks, it is like making 100%. So especially for this market, right, the scalping and day trading, they are the best strategies, right? Because you all know the market is, right, suddenly one day it goes up 100 points on SPY, next day it goes 100 points down on SPY. There are so many news impacting the market. So that's the reason this market is favorable. If you can do good day trading and scalping in this market, we can make a lot of money, right? 2020, 2021, those markets are good for swing trading and position trading. Right, yeah, but before that, let me explain them, and then I'll explain the reasons why this scalping and day trading are good in this market. And what do you mean by day trading? Your trading time frame is short term, medium term, and the frequency is, for example, for scalping you may place 20 trades, whereas day trading you may place some 4 to 5 trades. Again, most of the time, 90 to 95% of the time, you may be opening in morning, you right at market open or around 8:30, 8:45 central, you close around to 1 p.m, 2 p.m, 3 p.m central, before end of the market. Majority of the trades, there might be 1 or 2 trades which you may hold for next day, but most of the trades you will close on the same day. That's why it is called as day trades. That means same day you are opening and also you are closing the position. So typical holding time, generally it is hours. Very few scenarios, 5%, 10%, it might extend to 1 or 2 days. You may open today and tomorrow you may close it. And again, for this one, we use 5 minute, 15 minute, 1 hour, and 4 hours, right? Generally 4 hours will give you the overall trend of the day, right? How is it a bearish trend, bullish trend? Based on that, you know whether to buy calls, whether you buy puts. Based on if it is looking bearish, you also look at 1 hour chart. Is 1 hour also indicating bearish? Is a 15-minute indicating bearish? Is 5 minute indicating bearish? So when you get confidence from all time frames, if it is looking bearish, then it is a good time to buy puts. Or your 15 minutes might be showing a positive, right? It is moving up. Your candles are showing a upward movement. Your 1 hour is showing a downward movement. Then there might be some, right, it might be reversing in the smaller time frame. It might be still in the bearish trend in the higher time frame, but if it is in the positive trend or upward movement in the, then it is better to avoid such trades, right? It is always better when all the time frames are showing one direction, then your chances of success are a lot more higher. You can easily make, right? For example, on Friday we saw that everything was going down. If you generally, if we take puts, if all the time frames are showing a downtrend direction, what do you mean by downtrend? Basically your candles are going down, then we can make good money. So right, again, you look at support, resistance, all those things, but on a high level, if all the time frames are in one direction, the confidence level, the chances of making money is much more higher compared to only one time frame showing something and other time frame showing positive, one time frame showing negative. Then it might go up or down, and we might lose. Then your monitoring, it is not as active, right? With the scalping, you should be using active trader, right? In Thinkorswim, you should be very quick with button clicks, right? You should not be entering how many contracts you want to buy, how much stop loss, although you will be just doing buy and sell button. That's it, only buy button or sell button. I have explained about how to use active trader in Thinkorswim, or I also explained how to use in IBKR. Right, you can watch the video in our channel, where you know how to quickly do scalping, right? Even for day trading, it is better to use active trader so that you can quickly do buy and sell, because every second, every 5-10 seconds can make a big difference in the premiums. So we cannot avoid certain things in the trading, right? You cannot avoid FOMC coming up with some bad decisions, or we cannot avoid Russia-Ukraine war. But there are certain things we can avoid, like how quickly you can take the trades, so that your profit and loss difference, right? It can make the difference, especially if you're doing day trades. If you can take trades quickly using active trader tool, where you just do a buy, right? Already your positions are predefined, already your stop loss is predefined. You can quickly do buy and sell, and you can make good profits compared to making losses, right? Sometimes some members say that, oh, I never saw that price, because they are going and trying, right, for a day trade or scalp. They are slowly entering. By the time they enter all those things, already price might have went up 20% up. So even though the analyst is making profits, you might be making losses because of not able to quickly take the trade or use proper tools available in your hand, which are in your control. If we are not able to make use of them, you might be where you can make profits, you are losing the opportunity to make profits because of not able to use the tools which are in your control, which you can control, which you can practice, and which you can take quickly, right? So especially for scalping and day trading, please try to use active trader. Again, I'll do one more session also on active trader, or you can watch the previous video, right? In the previous video, I gave a high level overview of how to buy, how to sell, how to quickly take trades. In the next video, I'll also show you how to do trail stop, right? So that you are as long as it goes up, it will keep on going up, and suddenly it comes down by 10%, then it will automatically stop. You don't need to manually do right, exit the trades. For example, on the right Thursday, we saw that market was going up like anything. On Friday, we saw that market was going down like anything. So you don't need to close a position. You can automatically put a trail stop, so that whenever it goes to certain level and then it comes back by a 10% up, then your trade will be automatically closed. So even though you are going to a meeting or something, you don't need to worry that your position is open, and you cannot focus on in your office meeting, right? But by putting a conditional order, by putting a trail stop, whenever right, it goes down, down, down. If it is going down, it will keep on making more and more profits. When it starts making up by another 5%, 10%, based on whatever condition you have given, automatically the order gets executed. So doing that conditional orders also helps you very much to protect your profits or reduce your losses. So it is very, very important if you are doing scalping, day trading. It is very important to use active trader in Thinkorswim, or similar to active trader in IBKR. I never tried on right, Robinhood or any other platforms, but I use IBKR, I use Thinkorswim. I explained how to use those active trader and other, so that you can make good profits quickly, right? But 10 minutes, 5 minutes, make 10-15% on multiple trades. That is possible. But if you are still using the old conventional method of going and slowly entering the trade, entering the ticker, by the time you do all those things, already the premium might went up by 50%, 60%. So please take time to practice that for scalping and day trading. Swing trading, it is like a medium term time frame where you may place 4 or 5 trades per week, right? You are not doing 10 trades per day, 20 trades per day. You are doing 4 or 5 trades per week, and your holding period is few days or few weeks, right? Whether you are buying stocks or futures or options, your intention is to hold them for few weeks. You are not expecting them to close on the same day. You are expecting them to hold them for next 3 or 4 weeks and then close, right? For example, you may see that Disney is going to buy some company, or Microsoft is going to buy some ATVI. You heard some rumor, and you want to just buy that, or you see a lot of option flows on a certain date for a certain stock, right? For example, on Friday, we saw that Amazon, we saw a lot of bearish flows in December of 2022, in March of 2022. There is a lot of millions of bearish flow on Amazon. We, again, right, we took a day trade, we took some quick profits, but we can also take swings or leaps in that scenario. Why we are not taking many swings, I'll explain later. But generally, for if you are doing swing trading, we look at 1 hour chart, 4 hour chart, daily chart, and we can, right, you don't worry, you don't need to worry about what is happening in a 5-minute candle, what is happening in a 15-minute, because now your overall overview Your analysis is more on a day-to-day basis or hourly basis, 4-hour basis, what is happening. And based on that analysis, you are taking a trade which you want to close after a few weeks. Right? Generally 2020, 2021, we took a lot of swing trades and position trades. But in 2022, we are taking more of scalping and day trading. Right? Earlier, 80% of the trades were swing trades and position trades. Right? We were taking leaps. Leaps means where you are buying something for 2023 now. Right? For example, SOXL is at $7. In 2023 or 2024, that might go back to $30, $40, $50. You can buy a leap, right, where you are holding it for a few months, right? You may buy a 10 call or something now for 2023 June. Right, we are confident that that stock may go to 100%, 200% up by next 6 months or 1 year, right? Or TQQ is at $20, right? SOXL $70 stock is at $7, right? It is an ETF. It is not a stock. It is an ETF of many semiconductor stocks. So that stock cannot go to, right? That ETF cannot go to zero because it is a combination of so many stocks, right? If it is a stock, something may happen to the CEO, some manipulation or some false allegations, whatever it is. But ETF cannot go to zero because even if one stock goes down, if AMD goes down, NVIDIA and MU or right, Micron, Marvel, AVGO, all those stocks may go up in next 3 months, next 6 months, and that $7 ETF can go to, right? It was $70 last year. It may go to $30, $35. So, for example, you want to buy such type of things. You may take a swing trade or you may take a positional trade where your objective is to hold it for a few weeks or even for a few months. That is more a swing trade or a position trade where you look at hourly, 4-hour, daily. You don't need to be active. Like as for scalping, day trading, you need to be before the monitor. You need to put the orders quickly in and out. But swing trades, positional trades, you don't need to be before the money. You put a conditional order and then because your closing is after a few weeks or few months, you don't need to worry about it now. And the fee is moderate, right? Because you are taking only few contracts and your taxes are low. Generally liquidity is also low because your money is stuck for a few weeks or few months. You are not immediately buying and selling and you are not getting your cash back into your account. It is moderate. So your fee is moderate, your liquidity is also moderate. Whereas position trading, where you are only placing, right, again, as a long-term investor, you may want to dollar cost averaging. You may want to buy few stocks this month. Next month, you want to buy few more SOXL. Next month, you may want to buy some TQQ. You may want to buy some AMD, right? Because everything is at 80%, 90% discount now, right? All the stocks were $70 stock, now selling at $7, right? $70 ETF selling at $7. So Tesla from all-time highs, it is around 50, 60% discount. It might go further down, but if your intention is long-term, you want to build wealth for your retirement, right? Or you may want to do something for you may have a 5-year kid or 6-year kid. You want to save something for his college education. What you can do, buy some, right, long-term options or long-term stocks, buy some SOXL 10 stocks this month, another 10 stocks next month, buy some TQQ 10 stocks now, another 10 stocks next month, right? They may go up, right? $7 ETF may go to $50 in next 3 to 4 years, right? All these are big companies, standard companies, right? Most of them are in the top SPY, right? In the top 500 companies. So you don't need to worry that it will go to zero or these companies will become zero. All the computers need chips, semiconductors. All the gaming needs, all the artificial intelligence needs semiconductors. So there might be a downtrend now, but you are talking about 5 years from now, 10 years from now for your kids' education, for your long-term retirement, right? After 60, you might be 40 now. You are talking about 20 years from now. The same $7 ETF can become a $200 ETF at that time, right? Where you can make 500%, 1000%, 2000% returns, right? Stock can go down 100%, but it can go up 500,000% also, right? Especially we got that opportunity, right? Before COVID, everybody right, the market went down suddenly and suddenly it started going up. It moved, right, 2020, 2021, you know how markets went like anything. So again, we are in that phase where most of the stocks are available at that prices, right? When you go to any clothing store, any Macy's, JC Penney, or any, right, Kohl's or whatever store, generally you want to, right, you go to a clearance section, you see where the deals are. If a jerkin is available at $100, if you are getting it for $10, you will be ready to buy it, because the same item before few weeks they were selling it $100, right? We always want to get the best for our money, best for our investment, right? If it is a quality ETF or a quality company like Tesla, Amazon, Google, why don't you, right? You can buy leaps or you can buy some stocks, uh, but don't go all in at one time. If you want to put $100, $200 on SOXL, only put $50 now. Put $50 in the next month. Put $50 in January. So on average, right? That is dollar cost averaging, where suddenly you see that, right? Especially October is a month of reversal. You know, most of the bear markets, and midterm elections are coming, so there might be some government may try to put some, right, release some of these things and try to loosen up certain things. There might be some short-term bounce. We never know, right? Nobody can guess, okay, this is the bottom. You never know. Suddenly, what happened in COVID, suddenly market went up so high one day and it started moving up like anything. Everybody thought, oh, I should have invested, I should have invested. We never know, we might be in a situation where we are close to the bottom, or so. That's why don't put everything, but if you want to buy, if you want to use your $100, use $25 on that stock and buy some one-fourth of it. Next month again buy another one-fourth of it. Okay? And you are, don't look at every day whether it is green or red, right? You are doing it for 3 years from now, 5 years from now, 10 years from now, and you may make 300, 500,000% on that, right? You never know that SYXL may become $70 again, right? It was a $70 ETF. It came to $7 now. You never know, after 2 years, 3 years, it might go back to $70 again, right? Nobody can exactly tell it will go, but the chances of it going to zero is minimal, because again, it's a combination of so many quality stocks. Even if one stock goes down, other semiconductor stocks might go up, the ETF value. So it is the best time to invest into some of the leaps of ETFs like SYXL, TQQ, SYXS, or certain, there are certain things which I'll be sharing in the channels also. But on a high level, these are the 4 different types of strategies: scalping, day trading, swing trading, and position trading. Scalping is very quick. If you are an experienced trader, scalping, you can make a lot of money. Day trading, you don't need a lot of experience, but 3 months to 6 months is good enough, where you can take some quick day trades, 5, 6, 10 day trades per day. You can make maybe 15%, 20% on everything. But right, even if you lose 2 trades on 8 trades, you make 15, 20%. On 2 trades, you are losing, let us say 50% is the stop loss. Still you will be green, you will be in a profitable situation. If you use proper tools to enter and exit. If you are slowly taking the trade, you may not be able to make those profits, because, right, you all know how the stocks move in this volatile market, and also how the premiums for the options move. So you should be quick enough to buy them and close them based on the alerts, based on the indications. So in our channels, right, in our premium channels, or whenever we are giving, most of the times, right, we have different analysts like KC, MG, AA, HK, VC. So VC is still trying to give some swing trades, but majority of the analysts, because of the market scenario, market situation, either they are scalps or they are day trades 90 to 95% of the time, because you quickly make 15, 20, 25% in 15 minutes, 20 minutes, and then right, you may lose 1 or 2 trades, but out of 10 trades, if you win 8 trades and make 25%, if you lose 50% on other 2 trades, you will be, at the end of the day, you will be profitable. And you don't need to take each and every trade. If you are busy in the office meeting, don't enter. Or if you're going to enter into a meeting in next 15 hours, don't take a trade now. Because by the time you come back out of the office, out of the meeting, already the trade might be already right went up, and again it might be coming down now. So if you don't have any meeting in next 2 to 3 hours, then it is a good time to take a trade. Right, generally first 1 hour, right, on most of the days, the market will be bullish. Again, after right from 8:30 to 10 or 8:30 to 9:30, generally market will go up on most of the days, right, on a normal day scenario. Then you market will come down, market will consolidate or come down, and again in the power hour, again you see market again going up. So you have so many opportunities every day. In the morning time, you can buy calls. After 1 2 hours, you can buy puts. Again, at the end of the day, right before power hour, again you can buy calls. So on the same stock, right, you don't need to look at 20 30 stocks also. Just you take 2 or 3 high momentum stocks for the day, and you can just play with them. Buy calls. Again, it goes up to a certain resistance, and then again it will come down. While it coming down, again buy the puts. Again it goes down, and again in the power hour, in the last 1 hour of the market, which is between 2 p.m. to 3 p.m. Central, again many of the stocks with good catalyst, good news, they will again start moving up. So again you can buy calls. So on the same stock, you have 3 to 4 opportunities every day to make money, right? That is the best thing about scalping and day trading. That's what we are using in this market. So why this scalping and day trading are good, right? Let us see that. In this market, right, why day trading? You can be in and out of a trade within 5 to 15 minutes or maximum few hours, right? We all like, right, most of you like cricket, and you know about test cricket, one days and 2020. Everybody likes 2020 because it is short, quickly you can, you know the results. You don't need to watch for 5 days to know the result of the match, or you don't need to watch full day. But within 2020, every ball match can change. So the same thing is day trading, right? Again, it is day trading means I'm talking about stocks, options, futures, everything where you are holding, you are buying and selling on the same day. That is the best thing. The second advantage is you have better leverage, right? Your money is not stuck. If you are doing a leap or swing, that means your money is stuck in that position for a few weeks or few months. Whereas with day trading, everything you are buying and selling, that means you are immediately getting back your money. You may be getting with another 10-15% profit, or you may be losing some 10-15%, but you are getting back your cash. And you can avoid overnight risk, right? Especially, this market is news driven market. Suddenly you see some bad news from Biden, or you see some Ukraine, right? Ukraine Russia war, or you see some China Taiwan war, or whatever it is, right? You suddenly see something, then entire market can collapse, and all your positions can, right, premiums can go down, your stocks can go down. But with a day trade, immediately you are opening and closing, so you don't need to worry that, oh, there might be some news tonight, and it might impact our positions, right? That is the best thing about day trade, because you have full control, right? At the end of after 3 p.m., even though you see news, you cannot close your options position, right? Because market is closed. You may do some stocks or futures, but you cannot do anything with your option position until next day morning 8:30. By that time, already the stock might go up by 10%, 15%. Suddenly there might be, for example, Nicola, right, in KLA, there is some bad news about the CEO that he did a lot of fraud and other things, and he is getting into a prison. So on Monday morning, we may see that stock going down, right? We actually bought puts and took some profits, but it may give a lot more profits on Monday morning, that the stock might go down 20-30%. But if somebody is holding some calls on that, option calls on that, they cannot do anything until market opens. By the time in the pre-market, the stock might go down by 20-25%, right? That's what is the risk with holding the positions overnight, especially this market, right? If it is a 2020, 2021, things were stable, everything was going good, market continuously kept moving up, then you can hold for a few weeks, few days, no issues, few months also, no problem. Because most of it, right, everything works well in a bull market. In bear market, any small news also creates a lot of panic, and it is not all humans executing the trades, right? The algos will be looking for that buzzwords. If there is a pain in some right? If there is some Fed meeting, somebody says, right, some recession, it will create a lot of pain. Immediately the algos will start selling, shorting, buying puts. Then market will start, right? There are billions of dollars pumped by the algos, and everything will start dropping quickly, right? That's why you see that 1 minute in, right, suddenly there will be a release, a event. Immediately you see a big red candle, right? You saw on Thursday, Friday, how suddenly immediately they released a CPA report or they released a PPA report. Immediately you see, that means all, it is not that all humans are sitting at the system and executing the trade, but it is the algos when they see that, right, some bad words, some negative words in that CPA report, that it is more than the inflation is more than the expected. Immediately everything, all the algos gets executed at the same time, and they short it, and everybody gets panic, and all the retail traders will execute their trades later, right? So that's why, that is the current situation now. That's why we are giving more and more day trades and scalps compared to uh, compared to giving more in the swing and positional trades. Again, positional trades, again, if you are want long-term stocks or long-term options, it is still a good time to get them. But because your theta decay, time volatility, implied volatility, all those things will be very less on if you are buying a long-term options, right? Which you are buying for next year now. But you should have that patience to wait for a few months to make profits on those. If you have that patience, then you can take some leaps, long-term positions, right? But if you don't have patience, you want quickly to make some profit or ready to take some loss on the same day, then scalping and day trading is for you. Again, there are many stocks, many options, right? For example, on Thursday, I think you might have seen that MG gave more than 2000% on SPX. There are many scenarios with stocks and options where we made 100%, 200%, 500%, 1000%, right? You have, wherever you have a high risk, you also have a high reward, right? Whether you buy some stocks suddenly, right? We bought a DWSE at $2, it went to $150, $170. In the, right, with the day trade, it got halted multiple times. So there are many stocks like this. We bought NAKD, PHUN, U1, especially with penny stocks. You can make a lot of money if you enter at right time, exit at right time. You have something called as halts, which will also help you to identify those high momentum stocks for the day. And right, we can use those halts even for options also. I'll explain that later, but I hope everyone got, right, why day trading or scalping is good in this market, because this market is news driven market. There are a lot of Fed events, Fed meetings, so many Fed speakers talking every day, not only Powell, every day you see 3 or 4 speakers talking something, and suddenly market getting impacted, algos getting executed because of those speeches. Somebody says something negative, immediately market goes down. Somebody talks something positive, again it goes up. Because of that, what will happen? Your implied volatility, right? Your IV is just like an ice cream, right? If you are losing time, right? If it is going up and down, stock is moving up, stock is going down, again moving up, coming down, your premiums are getting burned, right? Whatever premium you paid for the calls or puts, you are losing the premium. So that's why, right, we are mainly focusing on day trading and scalping nowadays with both stocks and options. And what are the risks and disadvantages, right? You need to be quick enough. You cannot, right? If it is positional swing trades, you can slowly enter it. You, even though you take 5 minutes, 10 minutes, 15 minutes from the entry, it is okay. But if you are taking day trades, it is better you execute as soon as possible. Once an analyst posts a trade, if you cannot enter within next 5 minutes or next 1 minute, don't even try to take the trade, because already premium might have moved up by 10%, 15%. Right? If you are taking already at a 15%, the profit on scalps or day trades is generally 5 to 15%, 20%. Right? You are not talking about 100%, 200% on the scalps and day trades. So, right, very rare. Sometimes we may get like if we have days like Thursday, Friday, where market completely going down by 100, 200 points or going up by 100, 200 points. If you buy spy calls or SPX or something, you may get such type of profits on the day trade. But generally, on a normal day, 100 to 200 points, 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 100 to 200 your scalp is like a 5% profit. Your day trade is like a 15% profit, 20% profit. So if you are buying an option contract at a 15% higher premium than what the analyst gave it, then you are already buying at a high price. And when the analyst says, okay, I am exiting now, I am closing now with profit, you might be at a loss. Analyst might be making profits, but you are at a loss because you entered at a wrong time or you entered a wrong trade where already premium and so high. So if you see that premium already is too much, right? If it is within 2%, 3% difference, it is okay to take the trade. But if the premium is so much high, then that's why we give more trades, right? It is not to uh, create confusion or not to, we give it so that because you might be in some meeting when we gave the previous trade. Now, right, again, we saw another opportunity, we are giving another trade so that now if you are available, you may take the trade. We give another trade so that everybody may not be able to enter because 90% of our members are full-time or 90-95% are full-time in IT or some other jobs. They may not be able to take on time because they might be busy in some calls or some meetings. So that's why we give more calls so that whenever you are free, whenever you can enter on time, exit on time, you, you can take those calls, right? That's why don't see that, oh, I cannot take 20 calls, 25 calls every day. The reason is, right, if I can have only one analyst, I make a lot more money. But having multiple analysts and we giving multiple trades so that members, instead of entering with a FOMO, right, entering that, oh, I may miss profits on this and entering it late, they can enter when they can, right, see the alert at the price close to what the analyst is taking, right? That is where you have more potential to make profits rather than buying it at 10%, 20% up than what the analyst bought. And it can be emotional also because sometimes you make huge profits. Next day you may make losses, right? You are also right same day happiness, same day losing, right? Swing, you don't have that because you are buying today, you may sell it after a few weeks. So your emotions will be, you won't have such happiness or such uh, right uh, such sadness when you are doing a swing or positional trading. But with day trading, suddenly you become so happy that you made 8 profits, 9 profits in a day. There might be a day where you may lose 3, 4 trades at on same day. So, and sometimes, right, especially with stocks, it can be boring. Sometimes stocks may not move at all, right? If you're doing options, generally we take high liquidity like Nvidia, AMD, Netflix, or Tesla, Google, Microsoft. There are millions of billions of transactions every day. So stock moves up and down. So generally right, it will be interesting to see stock moving up, buy calls, moving down, buy puts, again moving up, again buy calls, right? You can, on the same stock, you can make money 3 to 4 times on the same day. But if you are doing with a stock, and if there is not a lot of liquidity on a specific stock, you might feel boring, right? You may not feel interesting. You want that, right? You want that quick movements up and down. That's where you can make money. And also schedules, right? Again, if you are doing a full-time job, your schedules might not support you. So that's why day trading also might be difficult for some of the members. So that's why, right, again, the concept of mirror trading is also for the same reason, because many members cannot take the trades, right? We launched it earlier, but we had some technical issues, so we kept it on hold. Again, we are planning to launch in November timeframe, where once we take a trade, it will be placed in your accounts. And we want to start with futures trading, and also we want to do with mainly indexes like SYXL or SPY or SPX or TQQ, such type of, right, rather than, because generally with indices and also with futures, the manipulation will be less, right? With stocks, there can be high manipulation. There might be suddenly a stock might go so high, the bid and ask, the spreads can be so wide, right? Sometimes if those spreads are changing so dynamically, and there can be, right, analysts might make profits, the members may make losses in the middle trading. That's what we observed when we launched it. Casey bought something in Tesla. He saw that in profits, but when members got it, they were getting into losses. So with all that experience, they right the collective to also fix some of the issues on their end. We are planning to launch in this November mid, where mainly we'll do some plans for futures trading. In futures also, people cannot manipulate, people cannot do pump and dump. In the same way with indices also, there won't be any pump and dump. So that is the plan, because many are working full time, many are not able to take the trades, right? Even though we have 80-85% success, but many members either they enter with a FOMO at a later point and pay higher premiums, or they exit late and instead of making profits, they lose. So that's why, right, that mirror trading concept where the analyst executes and it gets executed on all your machines. And I'll share more details on that very soon. But I hope everyone is clear with what are the advantages with day trading, what are the disadvantages, and what are the various time frames we look in the charts, right? How do we look, what charts we need to look, what analysis, and how we need to monitor, what is the importance of fee and liquidity, and for which type of investors, which is good, right? And again, I don't want to go through all the rules about pattern day trader, was sale rule, all those things. But this is one strategy which I want to explain each of you, that this is one of the top strategy for day trading, right? Whether you are doing it for stocks or options or for futures. Generally, if there is a high relative volume for a specific stock, what do you mean by high relative volume? For example, every day, let us say 10 million people are buying Tesla stocks. The volume on Tesla stock is 10 million. That means 10 million stocks are bought or sold on the day. Suddenly there is 50 million today. That means the relative volume is nearly 5 times more than the average volume. So if there is a catalyst, if there is some news with a specific stock, there will be a high relative volume on that stock. So you need to identify which type of stocks got that high relative volume on the day, right? Again, there are a lot of scanners available in Finvest, Thinkorswim, which will help us to find out which stocks got that high relative volume. But this is point number one. So you need to identify which stocks got high relative volume on the day. Second thing is, generally, if that stock gapped up, that means from yesterday's market close, if the stock is right, if it is a small penny stock or something, if it is up by 5%, 10%, it is a good candidate. Or if it is a large cap stock like Tesla or right, Amazon, Google, such type of stocks, they may not move 5%, but if they move 1%, 2% also, it is good. So if some stock gapped up, right? What do you mean by gapping up? That means yesterday it closed at $100. Today it opened at $105. You might be thinking how it is possible, right? Because if it closes at 100, based on our accounting knowledge, you open it at 100 or 100.1. But you need to remember that retail traders, we can only trade certain hours, but the institutions, the big organizations, right, all these hedge funds, they can do even trading, they can do dark pool prints, they can do even after hours, they can buy, they can sell stocks. So that's why if they buy a lot of stocks in the midnight or in the early morning, even before the market open, or sometimes at the immediately when market opens, they buy, you can see huge movements in the stocks. That means generally the stock is gapping up. Gapping down means stock is going down. It closed at $100. When market opens, it is at $95. That is called gapping down. Gapping up is it closed at 100, it opened at 105. Then if there is a news event, right? If there is some catalyst that Pfizer got some approval in Europe, or Tesla got delivered this many vehicles in October or September in China, they predicted only 25,000 cars, they did 30,000 cars. Or they are opening some new factory in Berlin, or they are doing something at Tesla in Austin. Or you see some news associated to, right, some company that, okay, Disney is buying this so-and-so company. Suddenly, right, there will be more interest on such type of stocks. Then if you are doing for stocks or premium option premiums, if the premiums are between $1 to $10, or if the stock value is between $1 to $10, generally most of the day traders like those things, right? Because if you are buying a stock, right, for example, on Friday, there was some stock called IMRN or something. It started at $2, it moved to nearly $4, right? There was some positive news. Right. So I'm just trying to show you an example. So IMRA, right? Buying IMRA at 3.1, target 3.35 on 5:54 a.m. So IMRA and Enliven Therapeutics said late Thursday they have agreed to merge in all-stock deal with the merged entity expected to have roughly 300 million cash flow. So there is a merger news. Then suddenly the stock went from nearly right $2.5 to $4 on the day. So if there is a stock with some good news associated to it, right? Generally, good news is or like there is a some FDA approval, or there is some partnership with Walmart, Amazon, or there is some right merger news. Some companies merging, some companies buying it. Then there is a huge interest on such type of stocks. So if you see a stock with such type of news, generally you can make good profits on such type of stocks. And another thing, right, especially with stocks, if the stock float is less than 10 million, right? 10 million, generally many stocks will have 10 million, but even if the stock float, what do you mean by float? Number of stocks available for trading, right? Every company will have some X number of stocks. There might be some stocks already reserved by the company CEOs and all the internal people. There will be only few stocks which are available for trading in the market. So float is nothing but the stocks available for trading in the market. And if they have only limited stocks, right, the demand will be much more higher. So if a stock relative volume is high, if it gapped up by, right, it is a big stock, big, right, a high price stock, if it gapped up by 2% or more, if it is a low, right, if it is a penny stock like less than $10, if it gapped up by 5% or more, if there is a news event, and if the stock value is between 1 to 10, or if the premium is generally between $1 to $3, and if the float is less than 50 million shares, generally those stocks are very good candidates for either you do stocks or you do options. You can make good profits on the day, right? Why? Because when you have less supply, demand is more, everybody has interest to buy that, then the price goes up so quickly, right? By within minutes, you see that stock going up by 100%, 150%. That is the advantage with such type of stocks, where you can make money with stocks or buying options. You can also make. So every day there will be few stocks like that, right? Every day you will see some news, right? I'll be, let me show you some examples. right? So we can build some scanners like, okay, what are the stocks moving in the pre-market, right? When I click on this stock, I can see like, okay, why that particular stock is moving. Is there some specific news related to that stock? Right, this stock moved up by more than 10%. The next stock moved up by nearly 3%, right? Again, right, this is some, right, from the Friday, but in the Friday, you saw that, right, some stocks we took on the day and they made good profits. Um, so, right, I have shown you some example, right? This IMRA, if you see stock, like how it moved on Friday. Right? And you can link all these news, this chart, so that whenever you put, right, you put here and you select two, and here you come and select two. So then whenever you enter a stock, immediately the same stock comes here and you can see the news related to that stock. If you click on that IMRA, right, on 1014, right, IMRA shares rise after news of merger deal. They have a merger deal. The stock, right, you can see that on Friday morning, the stock was around $2.5 or something. It went to nearly, right, 4.1. And then again, it start coming down. So you can make money in two ways. One is when you see the news, you can buy the stock, or during the market open, you can, right, again, I don't suggest to buy options on the penny stocks, but if there is a good news associated to some good stock, then you can buy, right, use the same strategy, but you see a catalyst with some AMD, Nvidia, or Google, Amazon, Tesla, you can buy at the market open, you can make good money. And generally these penny stocks will move for 1 or 2 days and then again they go down. So you can make money by buying the stocks here, and after a certain point they will come down. Once you see some resistance on that stock, you can also short the stock and make money again, right? They move generally for first 1 hour, 1.5 hours, they keep moving up and then they keep going down. You can also short the stock. You can say, right, even though you don't have the stock in your account, you can sell the stocks. You can short the stocks and you can, right, it goes to again $3.5. Right? There are hundreds of examples where if a stock is moving 100%, 200% on a day, next 2-3 days, you see the same stock will go down again back to the original price. Right? So you have opportunity on the upside, you have opportunity on the downside. You can buy stocks and you can sell stocks and make money on the next day. Like that, every day you have certain stocks where which satisfies all these conditions, right? Where there is a high volume, where stock is nearly 5% up. There is some news related to that stock. The stock is between $1 to $10. Generally, the float is less than, right, 10 million. You have very limited stock, but you can put a condition as 50 million. And we can, if you buy these stocks at a proper time, right, especially between, right, we are planning to do something like a sunrise program where 6 to 8, you don't need to be available for entire day. Between 6 to 8, we give 1 or 2 stocks of this type where you buy the stock and say, make some 10, 20, 30% in the same day, and you close the stock before you start your office. Right, I'm planning to start that some program like that, where we use this strategy. We identify some stocks. When they are moving up, you buy and you sell them. If you want, you can also short them at the end of the day, and next 1 or 2 days, again, you will make profits on the shorts. But one problem with penny stock is sometimes they are difficult to short. You may not have stocks available to short, or there might be some borrowing charges. For shorting the stock, they charge you some borrowing fee, and that borrowing fee might be high, especially if the stock has a low float. The borrowing charges might be a lot more higher. So that's why, again, it is right, for new traders, it is not advised, but if you're an experienced trader, you can make money on both the long and also short. So same strategy you use for the option tickers. So if you see, right, same thing, I have a scanner for something like, okay, $10 or above $10. So then it will list out some stocks with some good catalyst, good news, or right. I see like which stocks are moving on the day, right, in the pre-market, right? Because most of you, as you know, even before the market open, people can do trading, especially if there is a news associated to some stock. Those stocks, there will be a lot of demand and there will be a lot of buying. And then when you see all those stock names here, you click on the name and then you see what is the news. Then you can identify what will be the interest of traders on that stock when market open. Everybody will not trade before 8:30. There will be, if there are 100 traders, only 10 traders will do pre-market trading. But if we spend time in the pre-market to analyze which stocks are moving, then we have more chances to make profits on the day, looking at the pre-market volumes, pre-market news, all those things. You know that, oh, which stocks can move on the day, which stocks can go down on the day. If there is a negative news, the stock will keep on going down. You can buy puts and make money. If there is a positive news, if the stock gapped up, then generally that stock will keep on moving up and up on the day. So that is the way we can make good profits with day trading, with options, or with penny stocks by buying stock and selling stock, right? Because if you buy Tesla or Amazon, you may make 1%, 2%, right? Your capital is, if you are buying a stock, a large stock, you may not make huge returns on the same day. But if you buy a penny stock with all these things satisfied, it has a high relative volume, it has a up by nearly 5%. There is a catalyst, and the price range is between $1 to $10. The float is less than 50 million shares. If all these things are satisfied, then you have a huge possibility, potential to make money if you are buying at a support level. Right? If it already moved so much, if a stock moved 100% on the day, that is not the right time to buy it. Right? If it already moved from 2.5 to $4 or something, don't buy at that point of time. Right? You always can look at VWAP, or you can see that, oh, it is above VWAP. It will start moving up. Again, when it moves to the top of the VWAP, then close it, sell it off. So that's why, again, we'll be doing some of these sessions in the pre-market, right? Sometime in the next week, where I'll be showing you live sessions where how to buy these type of stocks and make quick 20-30% returns. And right, we'll be doing that. So before your office starts, you can make some money, and you can close the positions at the before you open. So they quickly move, make a quick 20-30% when all these conditions are satisfied. So we developed some scanners which will give all such type of stocks which are potential candidates. Right? Basically, this is an indicator for high demand and low supply. You have a low supply, less number of stocks are available. You have a high interest. There are millions of day traders who are looking at these stocks. And if you can buy quickly and make 10%, 20% and sell it off, and then wait for resistance, at the resistance, again, short the stock, again, you will make profits, right? Or use the strategy, identify which option, which high quality options can move on the day. Then you can do the same strategy and buy those options at the market open, or wait for 10-15 minutes, buy them, and then they will go up to a certain point. Again, they will come down. While they start coming down, buy the puts. Again, they will come down, and again they will start moving up from the support. Again, buy the calls. Again, they will go up, again come down. So same stock, you can make money 3 to 4 times every day or on the day, right? Which satisfies all these conditions. So again, that's what, right? I don't want to take a lot of time on a weekend, but I hope everyone got what are the different types of trading, what are the advantages with day trading, what are the disadvantages, and what are the various indicators, or what are the different criteria we need to see when you want to day trade a stock or an option. You have to look at all these factors. If all these factors are satisfied, you have a high possibility to make. Whether buying stock, you can make good money. If it is you're buying option premiums, then yeah, instead of 5%, if the stock gapped up by 2%, if there is some news event associated, right, there is a good upgrade, right? Some analyst upgraded Netflix from $200 to $300. Netflix will start moving. Or there is a downgrade suddenly from $40 NVAX downgraded from $50 to $20 by some top company analyst. right? It's not all the analysts will have the same weightage, but if some top analysts are downgrading them, then suddenly you will saw that stock going down. So those are the news events, upgrades, downgrades, mergers, or some associations, or right, or the FDA approvals. We need to see such type of things, and there is a good potential to make good profits each and every day using stocks or options using this particular strategy, right? So that's what I wanted to share today, and we'll be doing more sessions in the coming weekends. I'll help you. I'll show you how to build some scanners. I'll also do some live trading sessions where we can take these type of trades together in the morning session before office, so that right, and then you know practically how to do this, right? On right, that's what I did on Friday morning. I took that my two different stocks, and we made a quick $100 There is a catalyst. The float was less than 50 million. The stock was $3 price. There was a news event. It already gapped up from 2.5 to 3%. There's a high relative, all the conditions satisfied. Then we bought the stock. The stock, again, we took quick profits because I was looking at a lot of other tickers. I wanted to just take some 10% profit from 3 to 3.4. We closed it, but it moved to nearly $4 or more. Right? That's what happens with many of these stocks. If we buy at right time, we can make a good profits on them. But you don't never enter at a high price with a FOMO, right? You don't enter already if it moved by 30-40% up, 50% up, don't enter those stocks, because these stocks can move up so high and also come down in the same way, right? Because everybody making to 40-50%, they'll start selling it off. So the same stock can be dumped, right? There will be pump and dump also, because these big funds, they can buy some million stocks, and after 2-3 hours they can dump it, sell 1 million, 2 million out of 10 million or 50 million. If somebody is buying, right, buying a $2 stock, $3 stock is easy for them, right? Because they have millions of dollars, they can buy a million stocks, and suddenly if they sell it off, suddenly the stock will come down. So don't wait for too long. Make quick 20-30% profits, 40% profit, and sell it off, or right, short it and next day. That's why you also see the stocks go up one day, next day the stocks go down, because once the stock move 50-60-70%, the hedge funds will sell it off. They pump it and they dump it. So don't be at that place where you buy at a high point and then suddenly stock goes down. Again, it takes months together for that stock to come up. So if you are a new trader, completely new to trading, this strategy may not be for you. But if you know what you are doing, if you are a little experienced, then you can use the strategy where we can make good money even with stocks, not only with options. We can make good money with stocks also. Only thing is, never buy at a high price with FOMO. If a stock moved, penny stock moved already 30-40% on the day, it is not right time to buy it. You saw news event, you saw all these things, and it is ready to bounce. It moved 5% or something, still 10%, it is good to buy. But if it already moved 30-40%, don't buy it, because suddenly it can be dumped. Sometimes it may go 100-200%, but you never know. It can also be dumped after 50-60%. So that's where many people will have baggage of these penny stocks, and it takes, right? If you buy a quality stock like Amazon, Nvidia, Tesla, even though it goes down, suddenly when market goes up, again those stocks will be the first ones to go up, because everybody wants to buy those stocks. But these penny stocks, everybody may not be interested unless all these conditions satisfy. If there is a positive news, if there is a high relative volume, until that time nobody else will buy that stock again. So don't be the person carrying the bag. Only if all these things are satisfied, and if it is below 10% from the low of the day, then it is still good to buy. And yeah, we'll be doing some live sessions in the coming week, where I'll send a Zoom link before around 6:30. I'll run the scanners. I'll show you with stocks what news is there, what is the float on the stock, how much it gapped up. I'll show you all the criteria. I'll buy the stocks. You can buy with me, and again we can take some 20-30% profit, and you can sell it off after some time. Okay? With that, thanks everyone. Thanks for joining on a weekend, and we'll do more of these sessions, and we'll talk again on the coming weekend. Good night, everyone. Have a nice rest of the weekend.